Good afternoon. How are you all doing? Afternoon, Paul. Afternoon, Wozciak. How are we doing? Happy Friday. Friday's last session. Friday. Like Fridays. Right. So, quick update on this morning. If you were in the live room this morning. So, we had a load of rubbish this morning. Really choppy price action. It's a fair bit of movement, but no volume. So, got stopped out this morning on the FTSE long, and then I got stopped out on the FTSE short. Then it broke up to the upside, didn't get anywhere, broke back down to the downside, still not got anywhere. Took a long on the DAX, which stopped out, sat around for an hour and a half or something, and then we've suddenly collapsed down. So short has triggered, which I am about to take a partial on. The partial TP was here, which it's literally tapped into the TP and then is bouncing again. So I've just moved TP up, basically just to make sure that I get that take profit partial. So there's $500 of profit there, which I'm going to take on the DAX. And then I'll leave a runner going in case we do break short on the US session. So there's plenty of downside on the DAX. The highs we seem to be sort of, it's not exact at all, but it's sort of around this area. It seems to be sort of holding at the moment. So if it breaks that, I think we're going to flush down this afternoon, but it's going to need the US market to drop. So I will close that out with a partial. I'll wait a second until that's shut. And then we'll have a look at US indices. Afternoon, Peter. Afternoon, Marco. So getting back basically just this morning's choppy loss. Then we'll have a look at what's going on with the rest. News-wise, I've got 25 seconds. Let me just let this play out. Then we'll have a look at the news. So this is, I never trust this price action here. Pre-market, rubbish. So we're just kind of breaking into this little low before the close yesterday. So this is your main propulsion move before the close and that. So this is where I'd expect to find some price action. There we go. So partials taken, which gets back half of the morning's loss. S&P 5-minute range is in. It's almost exactly 15% of ADR. So I'll be taking a break of that. NASDAQ range is too small. Not far off. So as long as we get a little wick out either side, we'll be getting a break on the NASDAQ 10-minute. Dow Jones, big range on the Dow. That's about 30% of ADR just gone in there. So that's a really big move on the Dow, look. In fact, it is 30% because the stops are bang in the middle. And I've set it on 15. So that is a 30% opening range. That's pretty big opening range. So fair bit of volume coming in at the open. We've got the University of Michigan at 3 o'clock. So we might get a choppy session, but we'll see where we go. That looks pretty strong at the moment. So if that does break down strong, that's going to really help that DAX. So we'll see where we go. News-wise today, very little this morning. The Russian and Ukraine talks were going on this morning. Nothing's really come out of it at the moment. But if there is a kind of resolution on the cards there, that should send the market fairly bullish. So we'll wait and see what happens. But I've been monitoring the news this morning on the Discord channel, and I couldn't really see anything particularly interesting coming out. So we'll wait and see. We might get some news coming out on that. Apart from that, as you can see, there's no other news this morning at all. That was something on, I don't know why oil reacted off that. It's supposed to do with Iran. But yeah, that was it. So no news today. So the only forecast news we've got is UOM, which is at 3 o'clock. And then that's it. So after the University of Michigan's gone in, I think that's probably going to be us for the day. So it'll probably be a fairly short session today. Afternoon, Marco. Isn't it already over? Just reading something in the news, the Russian talks. Yeah, I thought it was over. That's why I was just scanning there. We are satisfied with the results. That was 235, so that's just come in. I'm just waiting to see if there's something that actually hits an official announcement or anything. Agreed for 1,000 for 1,000 prisoner of war swap. Said to demand control over 5 regions. Yeah, I mean, it's just Russia like demanding this, demanding that, I think. I don't think we'll get anything positive out of it, but just be prepared, because if the market suddenly takes off, it could be because of an announcement. Right. 10-minute range is about to go in, which is the moment inside bar. So on the Dow, we're inside bar, and we're also inside bar on the S&P. So no breaks. NASDAQ, I think, is the same. Oh, no, NASDAQ's down. So, okay, so that's your 10-minute range gone in. That should be enough. Just about to get us a 10-minute ORB. Ukrainians already said up yours. I'm not surprised. Afternoon, Mark. Yeah, not surprised. I would. Basically a hostile takeover, isn't it? Never going to end well. Okay, 50 seconds to go on this 5-minute candle, and then the 10-minute range is in. 65, so that's plenty of room. So we'll definitely be taking an ORB on all 3 today. High risk today. How long have we got? We've got 20 minutes, haven't we, to Michigan? What I'm worried about is us just sort of flip-flopping around, triggering trades and going nowhere. And then Michigan taking off. Just don't want to see them whipsaw outside that initial 5-minute range, ideally. But that's going to close nicely inside, bang in the middle of the range. So we shouldn't really get triggered on both ends, hopefully, on that one. There you go. So there's your NASDAQ trades gone in. So pendings on all 3. See where we go. Right, FX-wise, today, nothing closed out today so far. This morning, if you're in the live room this morning, I took a Swiss yen long. We just went red, green, red, green, red, green. And it's just started to break back down into a double bottom. So not gone anywhere this morning. Everything else is pretty much as it was this morning. Nothing's moved. So Aussie, New Zealand, good progress on Aussie, New Zealand from the highs. So we are back down. So that's the last trade I took, which was on Monday. Since I took that trade, we've gone absolutely nowhere. So we've literally gone sideways since I got into that position, but we have now got a reversal alert on the hourly. So that's a good sign. We've broken into this low, which we've been hitting. It's bounced back out. So we have got a reversal alert though. So what I'd ideally like to see is us push back up into this area here today, and then hopefully start that breakdown on Monday. I mean, if it wants to flush beyond ADR today, fantastic. But I'm not sure it's going to. Swiss yen I've already covered. Euro CAD I've also got on. Again, sitting at break even on this thing at the minute. Just going nowhere. So, yeah, waiting. We're back inside this area of balance again after a failed breakdown. So the danger with this is we run high. So this accumulation here, this area of balance. So that was your previous balance. Price discovery fell into balance again. Price discovery failure. Normally, we would expect it to rally back out and try price discovery back up at the previous area of range, but might break down. So we'll see. We are definitely downward motion, but not going anywhere. Can't do anything with it. Frustrating market at the minute, really is. And pound US dollar, again, same thing. I'm in 2 positions short. First entry was taken on the break, second on the pullback. we are exactly where we were when I took that trade back on Tuesday. It's not going anywhere, so can't do anything with it. I'm really hoping Michigan shakes the market up and moves it this afternoon. But ADRs, we've got a couple. Obviously, the main mover today has been the New Zealand dollar. I looked through the news this morning. I couldn't see any real reason for this New Zealand move. What time did it start? Yeah, it was early, sort of 3 o'clock. But I didn't see anything this morning. We had the inflation expectations. I guess it must be the inflation expectations, but this is only a quarterly forecast, which is why it's orange. It doesn't really do a lot. They're forecasting inflation to go up, which would be interest rate freezes, which is bullish, which is exactly what's happened. Short breaks on all three. No, sorry, NASDAQ and the, because I'm already in the DAX. So NASDAQ and the S&P broken short. So yeah, I guess it must have been that. But I mean, that's a big reaction to what is in effect this is what might happen. It's not actually a number. So look for continuations on that, Euro New Zealand's. But if you took an ADR reversal, it's already played out, but it's not very clean at all. So it was like a 3 candle pattern. Did come back and retest. Not great. Pound New Zealand, they're all the same basically. Pound New Zealand, again, ADR hit to the downside. Much cleaner reversal alert on that one. Nice, clean market structure playing out. New Zealand dollar Swiss is the other one, which is obviously New Zealand based as well. That's obviously a hit to the upside because it's a New Zealand base cross. So there's your ADR, straight into ADR, straight off, and this is your retest happening now. So look for a push back down into here. But not a lot else happened this morning. RSIs are all flat. So we had RSI this morning on something. Go and watch the live room this morning. It was a 4-hour. I'm pretty sure it was the pound yen. Maybe. Don't know. Something around, it was euro yen, wasn't it? It was euro yen because we looked at the euro yen because it was the Swiss yen that I was in. So we looked at the euro yen. So that was your 4-hour RSI extension this morning. That's now gone because obviously we've pulled back up. So that's starting to play out. Very nice market structure. Low, high, low, lower, higher, low, higher, high, double bottom, higher, high, higher, low. Off we go. So it looks pretty good. Lower time frame reversal alert has just literally gone in the last hour. Very messy, but it has broken structure. So that could go from here. But again, it's nice normal market structure, isn't it? So pull back up inside range. So rejecting the lows on the NASDAQ. Tried to break out on the S&P, failed as well. See where we go. So you are trading the new ORBEA. When do you trade the stock index hedge? That's trading as well over here. Right. My phone's going mad. Don't know. Yeah, SIH is working as well. SIH this morning, just to break even on the FTSE. So this morning was straight up. We just shy, look, of that was the 3R target. Just fell shy of it, and the trailer kicked in. So basically, the way I have this set up is I have a trailer set up at 2.8. So the first target is 3R. I kick in the trailer at 2.8 just in case of this exact scenario that we get just shy of your target, so you don't get your target hit, and then it pulls back down again. Because what often happens is you'll get up to here and it will hit the level, but the spread won't trigger the order, and then it pulls back, and it's really annoying. So I set mine slightly lighter. So that's just stopped out at break even. This is only running on a very small account. But yeah, it's up 11% this month. Got 0.5% in profit on the NASDAQ, on all three actually. But I've got a horrible feeling we're just going to whipsaw today. Are you still running the 3-day ADR for the ranges? Yeah, at the moment I am. It's something I'm going to do a little bit of testing on, because I'm actually finding these 3-day ranges, 3-day ADR periods, good at the moment. But at the moment, we've got a fairly normal price action going in. So if you look at the price action on the indices at the moment on a 3-day basis, it's pretty, that you get the odd, we had a nice big day yesterday, but if you average these three out, so if you have a big day and 2 normal days, it's actually pretty accurate. But if you look over the last 10 at the ranges, I'll change it. Look, so this is ADR 10. So ADR 10 is 527. So if I switch over to ADR, hang on. If I switch over to ADR 3, okay, ADR 3 is 393. So there's a very big difference between the ranges, because what you're doing is you're filtering out any, unless obviously it's happened very recently, but you're filtering out any really massive price action that can skew these numbers. There's no right or wrong, but at the moment, working on ADR 3, as you can see, I mean, it's pretty good. I haven't done any testing with it though. So the only reason I switched to ADR 3 was because of all the volatility we were getting with Trump. So I wanted to try and get that out of the way as fast as possible. Whether it's the right or wrong thing to do, I don't know. But ADR 3 is working. But ADR 10 will be working as well. It'd just be working with different levels, won't it? Again, like we covered this morning in the live room, what's right and wrong? Who knows? It's different. That's all it is. It's different. But the difference between a 400 and a 530 is about 20%. So you're going to have roughly 20% variance on the ranges. And we're only looking at 20% of that 20% variance. So the actual difference it's going to make isn't going to be great, I don't think. But if you're running on ADR 10, you'll be able to tell me, because you'll have different trades on, I guess. Let's get the likes up. Where's John? Here he comes. I can't move your window. Poor old John. There he is. David. Happy Friday. Get a beer on me. Thank you very much. I will do that. I will get a beer. I've just cancelled my exercise class this evening, so I might actually go for a beer instead. I shall spend that $10. Thank you very much. Very much appreciated. Always appreciate a beer. Afternoon, Herman. Afternoon, Mumo. I thought about changing it to 5. That you have the last trading week reflected to keep it close to the market. Afternoon, Noob. Yeah, so again, it really is a personal preference. I've always used ADR 10. The reason I've settled on ADR 10 was because all of my testing was done on ADR 10. No, sorry, that's complete rubbish. The reason I settled on ADR 10 was because I tested all of the ADRs from very low, like 3, all the way up to very high, like 60. And I found 10 to be the sweet spot in the equity curve. There's a video on it on YouTube. Not on there, in there. Oh, yeah. So, oh, there you go. That was the graph. There you go. So this is testing ADR5, ADR10, ADR20, and ADR60. In my original testing, I did lots of variations in between as well. I went from ADR3, ADR5, which makes sense for a week, ADR7, which is a calendar week. I tested obviously ADR10, which is 2 trading weeks. I tested all the interim ones as well. So you can see the curvature of these lines. So the big spiky ones are the ADR5s. So that there is COVID. Yeah, and you see how quickly it comes back down. ADR60, which is the 3-month ADR, obviously you can see how smooth that is compared to all the others. It's a much nicer sort of ADR, and it works really well in forex. It's great for position trading. But for scalping, you want to work with what I think the market is doing really recently. So if we are suddenly getting really volatile, VIX is up because we've got something happening in its earnings fortnight, we've got some war kicking off or something, you're going to get a lot of volatility. So you need to adjust on a short period to that volatility. In FX, when you're scaling into position trading, you need it to be ideally, I think, a little bit longer. But these are the differences. You can see you're getting loads of peaks and troughs with small ADRs, and you're getting hardly any peaks or troughs with long ADRs. Test them. Which one's right? Which one's wrong? I think the outcome of my sort of sample data was it doesn't really make a lot of difference. And I stick with ADR10 because that's the one I've always used. But for indices, I think there is an argument for using a shorter one. So I'm going to keep testing it, or to keep trading with it as it is for the minute. What I'm interested in is getting into trades. When you have a longer ADR, if you suddenly go into a really contracted period for a week, you won't get any trades because the ADR for the last 10 days, last week when it was volatile, is going to be big, which means that you're just not going to get those 20% or 15% minimum ranges hit. So using a shorter ADR when that happens means you get into the trades faster. So it adjusts dynamically a little bit quicker. Whether or not it's right, I don't know. It doesn't matter. Everything in trading is random, pretty much. So we've got 5 minutes to the market open. To the news, the University of Michigan. This is what I was kind of worried about happening, being very whippy pre-market. There's a danger Michigan will just do that, just turn into a nightmare. I'm going to stop out on the S&P by the looks of things. Stopped out S&P and flip long. It's going to ruin the end of the week, isn't it? I remember you tried a 60 period ADR and that worked. Yeah, it all works. It all works. It's just different. It's exactly the same as like we covered in the live room this morning. The live room session this morning was about 2.5 hours. We went through a lot of stuff, but it's like the difference between 70 and 80 RSI. It's just different. That is a different level to that. Which is the right one to use at the moment, the 70, because you haven't had any signals on the 80. So that 70 worked. That 70 is working. Yeah, but if you went on the 80, you haven't had any trades. So the right one to use at the moment is the 70. When it goes parabolic for 3 weeks in one direction, the right one to use is the 80 because it gets you into the squeeze later. But you don't know what's happening in the future, so you can't pick the right one, can you? That worked. 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 But they're all 70s. So the 70 triggered there. The 80 triggered here. So that's the difference between the 70 and the 80 RSI. Massive. But this is Trump. Yeah, nothing is going to work when somebody upsets the entire economics of the planet. Doesn't matter what indicator you're using, it ain't working. Right, so I'm in the unfortunate position now that I have a hedge on because I'm short on the NASDAQ now and I'm long on the S&P, and these two are correlated. So one of these is going to be a loss, unfortunately. But no, University of Michigan is 1.5 minutes away. So hopefully UOM will send it flying in one direction and one will pay for the other. But it's not looking like a wonderful session at the minute, is it? Let's see what's going on with that DAX. That's pulling back. So DAX is a break even. So what I would ideally like the market to do is to tank. So that S&P that I've just got into, I want that to stop out. I want the NASDAQ to break short. I want the DAX to continue short, and I want the Dow to short as well. So negative news, negative movement on the news would be the ideal today. But I can't control that. You trade the ADR on the H1M5 time frame. I don't trade ADR reversals. I trade H1M5 mean reversion. I'm always using ADR is not a strategy. ADR is a measurement of movement. So ADR is at the core of everything I do. Everything I do is based on ADR. ADR is how you measure an instrument's movement. If people that aren't using ADR are just I don't know what they're doing. They're using pips. Pips don't work, as I've just proved. That little graph I just showed to do with ADR 3, ADR 5, ADR 60. Yeah, you see the difference in the spikes? When those spikes are massively high, if you're using the ADR 60 figure, when ADR 5 is 10 times different, yeah, so if this thing normally moves that far, and then for 6 weeks it starts moving that far, your strategy is not going to work. Yeah, it's just not going to work. You're going to get stopped out all the time. It's just going to hemorrhage cash, which is why we use ADR. So ADR is a measurement of symbol movement over a period of days. Michigan's out. We have broken short on the NAS again. The Dow, Dow's triggered long, stopped out immediately. It's going to be one of those sessions. It's going to be like a six loss. We're going to have to get it all back on Monday. What a load of rubbish. Choppy market. Are you currently doing position trading again? Yep. Yeah, I've been position trading for weeks. Low risk though at the moment, so not making a fortune, but it's low risk. So I'm limited at the moment to 7 pairs to keep the exposure tight. So my exposure I can't get exposed heavily on any instrument in any direction because I'm just trading 7 pairs: Aussie New Zealand, Aussie US, Swiss yen, Euro Swiss, Euro pound, Euro CAD, and pound US dollar. So those are completely uncorrelated. So there is no similarity between price action on these at all. A little bit there actually, but they're just different. The movement of all the instruments is different. So if there is any squeezes off the back of Trump tariffs, we should get movement in different directions. So just to protect capital at the minute. Today is Friday, so it tends to range or do whatever we not think will happen. Today is Friday. It's a day. The market will do what the market needs to do based on the order flow that it gets given on its desk. Fridays have got nothing to do with anything. I've had Fridays which have made me $5,000. I've had Fridays that have lost me $2,000. I've had Fridays that have broken even. I've had Fridays I haven't taken a trade. No 2 days are the same. I don't subscribe to any of this rubbish about this day, that day, turn around on this day, this is the middle of the week, blah, blah, blah. Yeah. If the market needs to move, the market will move. Nothing to do with the days of the week. Not that I found anyway, but some people, and there's always an edge. You can find an edge in anything. Yeah. If someone says to me on a Wednesday at between 4 and 6, if you take a trade long every day for the last 6 months on this instrument, it would have made money. Absolutely fine. But go and test that over a decade and tell me the same thing happens. You won't find that. So short term, yes, maybe, but not long term. There's no long term edge in that. Not that I found anyway. This is going to be an absolute mess today. Thanks for the follow, whoever that was. Can't read it. I cannot read that. Temesgen Woldiohannes. Thanks for the follow. Stopped out on the S&P, so that's it. S&P's done. Nasdaq's so Nasdaq is going to it's already triggered short. So the only hope I've got on the Nasdaq is either a complete breakdown or we stop out, flip long, and go absolutely crazy today. Look at that for a stop out. Look, triggered, stopped, back in profit. Whipsaw, absolute pile of crap. Nothing you can do with it. So unlikely that Dow is going to trigger short. It might do. But it does look like the market's rejecting the lows at the moment. So it looks like it wants to break long. So I will go with long if it goes. If it doesn't, I won't. DAX is going to probably stop out as well because we're breaking long. Oh, what a waste of the week. Well, not a waste of a week, but what an end to the week. Still up 1680, but get it back on Monday. There's always another day. This is one day of about 200. Saw some research a while back arguing for not trading indices on Fridays for ADR-based strategies. Who said that? Due to low volumes in the stock markets on Fridays. Do a test, Momo. So run a back test. Stick your back test into Strategy Quant and see if Fridays are losses. If they are, don't trade them. I haven't found that personally, but if I had, I wouldn't trade Fridays. That's not what my findings were. Seeing if I've got the data on the website, I'm not sure if I have. It's the one bit of data I didn't include, isn't it? Yeah. It's on that tab there. It's that one. That would tell you if day of week has any bearing. Day of week didn't have any bearing in my tests, but do your own due diligence. There wasn't any. I haven't got day of week anywhere. No. Oh my God, look at the state of this. But yeah, do your own tests, basically. Run a test, stick it in Quant Analyzer, and do a trade analysis and see if there is a day of the week that it is less profitable. But I would say if it's less profitable, why would you exclude it? Doesn't mean it's not profitable. I would only ever exclude anything from a day of week analysis if it was obvious every single Friday it lost. So it was a losing, the P&L, because it paints in bars. So it would go Mondays, Tuesdays, Wednesdays, Thursdays, Fridays. If that's the case, I wouldn't trade on a Friday. But that isn't the case. It was in the green every single day to varying degrees. But you run that test, you do that analysis over a period of a year, and then run the same test over the previous year. These will all be green, but this one will be higher than this one, which will be higher than this one, which it will be different, but they'll all be green. So can't exclude it. DAX is pulling back from propulsion. I am running SIH with a small account. I'm using a range from 0.05 to 0.3 with targeting at half an hour and 1 hour. Got roughly 3% a week on average. Cool. And then rehedging. If you rehedge manually, yeah. Yeah, you have to rehedge manually. You've got to do some manual work on that one. Look at this thing. Right, there's one or two things is going to happen with this. There's an iceberg order sitting here. Yeah. Who's buying, literally just buying everything up that comes into this zone. Yeah. So either that order is going to run out of steam because there is downward pressure, obviously, today. But if that order runs out of steam, that thing is going to pop. We're going to break those lows. So we'll see. At the minute, obviously, they are just buying it up over and over and over again. But if that order runs out, they'll be off today. Looks like that's the only order in the market, doesn't it? Absolute chop. I think I'll hope on next week again with position. Hop on next week again with position trading. Yeah, it's back. The market's back to. I wouldn't say it's back to normality by a long shot because what we're seeing at the moment is just this. So it's just very, very slow position trading at the moment because it's not moving, is it? You know, you need some kind of movement. We're struggling. The ADR dashboard at the moment is, you know, not lighting up. Yeah. We haven't had any really big 150, 175 days. We've had the odd one every now and again, but that's only been caused by Trump. So, you know, getting a normal ADR off of news is just not really happening. So nothing's really getting anywhere. It's tough, but it is what it is. Part of the job. What happened to the US 500? That gap. I don't know. Big order come in there. Don't know. That's a pre-market gap as well. Yeah, I mean, look, something happened there, didn't it, on all the indices? We had some pre-market volume come in. Okay, so watch this area here. If we break these lows, we're going to go, I think. Got to break these lows, eh? Watch this iceberg here. that fails, they'll flip short on that and it will go. Can't get through, can it? Someone is sitting there with a very big order book, buying everything up that gets there. They'll give up eventually and it'll flip. Interesting. Capped at 7 trades. I may think about doing that instead of restricting myself to only being exposed to a currency once. Can do. The only reason I'm doing this at the moment is kind of as a self-control thing, but also from a confluence point of view. So what I'm looking to do is keep the exposure light. I don't want to get overexposed too much on anything. So the pairs that I've chosen allow me to get 2 Aussies, 2 Swiss, 1 yen, 2 euro, 1 pound, 1 CAD, and 1 US. Yeah. So that is the maximum exposure that I can have in any one direction. Also, all of those 7 currency pairs are less than 60% correlated. So what's important, I think, at the moment is correlation. Yeah. So if you are trading, for example, the Aussie US dollar, and you are trading the New Zealand dollar US dollar, you are trading the same thing. Yeah. That's the New Zealand US. That's the Aussie US. Yeah. It's the same thing. So there's no point in trading them both because you are just trading the same thing because the correlation is way above 70-80%. So every single one of those pairs is less than 60% correlated on a weekly basis, which means that whatever happens in the market to commodities, to any individual currency pair, the rest of them won't move in the same way. So it means that if something squeezes, I'm restricted on squeezes. So it's just to keep at the moment, just to keep a lid on my exposure. And it means I can't overexpose, basically. Just while all this Trump stuff's going on, because we don't know what's going to happen. Yeah, I mean, the China freeze is on. The freeze is on for all the other tariffs. We got 90 days where he's gone, all right, come to me with some deals. Everyone's going, nah, don't really want to. We've done a deal in the UK. That was great. So we're going to take a little bit of your cattle and you can have a little bit of our whatever we give you. Yeah. It's basically a token gesture. There's no deal being done. Nothing that really, I mean, steel and aluminium we got out of it. But now we've got to take some of their beef on. You know, it's that sort of deal. It's not really a deal. The China thing, he's basically realized he's destroyed the US economy and now you can't buy anything that you all use in America. So we need to remove that, don't we? So this not over and done and dusted in any way, shape or form. He's put a freeze on it for 90 days because it's backfired dramatically. So while this is all still bubbling for 90 days, I don't want to get too involved. I'm getting involved, but I don't want to overexpose myself because the moves that we've had on the US dollar can easily happen again. And I think the world is basically woken up to the dollar. We've had agreements in place since the Second World War, which are just not working in the economic environment. So I get him shaking it up and ripping up the post-war agreements and rules, but not in this way. This has alienated the entire Europe, basically. Yeah. there's three main continents, trading continents: US, Europe, China. What he's done is told Europe to go to China, created Europe and China against America. That wasn't what he was expecting. That's what he got. So it's turbulent times. And when they realize what impact it's having on the US, I think there's going to be some changes. But what they're going to be, I don't know. So I think within the next couple of years, we will start trading yuan. It will come in as a major currency. But the Chinese have got to release some control, and that's the thing that they don't do. Communist countries don't release control. So it's very, I don't know, we're just in a tricky situation at the moment. So, just keep it tight. This is rejecting. Stopped out on the NAS. I'm going to call it a day, I think, on the indices. There's no point in getting involved in any of this. It's just an absolute mess. A couple of grand lost today. Oh, I didn't get stopped out. Right, if that's the high of the session, I'll take it. So yeah, like I said, they're giving up. They can't beat this iceberg order, so they're probably going to flip, and the market will flip long. How far it will get, I don't know, but they can't break this order. There's too much money sitting here, so the only option they've got is to try the other way. It's like if you knock on a door so many times and there's no one in, you go. That's what the market's doing. This door is shut, so the only thing they've got is flipping long. So that's the only other trade I'll take today, which is a long break on the NAS. The Dow, I'm going to cancel the short order off. I'm not going to take that short. DAX will stop out if it breaks long at break even. That's kind of it today. Total choppy mess. Good day, gold. Treated you well this week? Good. That's what we like to hear. At least someone's making some money. Not that I haven't made money. I will get it back. I need a 3R on Monday. Get that back. Easy. Need it to do it. When you should not make a trade when Jupiter is in Saturn and the wind is coming from the west while it has been raining for 2 days in a row. That's pretty accurate. You'd be amazed how many people have come to me with that strategy. Not that exact one. Usually it's to do with moon phases. It's usually the Chinese. They like their moon phases. So yeah. I'd love for NAS to tank as well. Yeah, it will now. Now I'm out. Right, so you talk about stop loss. Doesn't get any more accurate than that for an exit, does it? How's that for a stop? To the pip. And now it'll just collapse. Peter, I meant the 2 in green bars, one close top of the range, but the other one at the bottom of the range on the S&P. Oh, this. Yeah. That is that's the University of Michigan. Yeah, so that's your news. So that's your gap on the news. There's no volume basically today, so you just basically gapped. As soon as the news hit, someone entered a large order, which ate all orders on the way, and it gapped straight down into that was the first tradable price, which is why it filled the gap straight away. This is what happens in low volume. You gap all over the place. What it was like this morning as well. This just today's been very, very crap. It's just there's no volumes, no directional bias, there's nothing today. Nothing you can do with it. These are the days where you make the losses. You just have to take them, move on. When you get the big breaks where we go 5R within an hour, you'll be sitting there going, brilliant. Had one of those this week. No, last week. 2.5 grand day. You know, it's not unusual. It's just annoying. This is trading. If you want a job that's not annoying, don't do this. I hope it sells to 21,270. You'll be lucky. Don't think you get down there today. Might do. That's low of the day, basically. I'm not sure that we should trade the yuan. Economic power is one thing, but the rule of law and other things such as free trade is also a major thing. Yeah. At the end of the day, as traders, you trade what moves. So, if you know, this is the thing, the Swiss franc, we never used to trade the Swiss franc. Yeah. So going back pre 2014, we didn't trade the Swiss franc. Because it was capped, it was pegged. So the Swissy wasn't something you traded. Now we do, because it changed. They removed the peg and it was free trade. So all of a sudden, everyone was trading the Swiss franc, and it's become the biggest safe haven currency we have. Yeah. As soon as there's any problems anywhere in the world, you put all your money straight in the Swiss franc. 15 years ago, didn't exist. Didn't happen. So things change. This is a new world order of trade. Trump has ripped up the rule book of trade worldwide. He has made it less attractive to trade with the US. It is now 10% more expensive as a blanket for everybody to do anything with the US. And we haven't got deals in place with anybody. So not of any consequence yet. So it's changed. Yeah, it's just like the Swiss franc peg removal. And look at the go back and look at the Swiss peg removal and look at the consequences of it. Find it. It's got very far-reaching consequences when that sort of thing happens. Yeah, that's one day. Admittedly, this was an instant, unexpected peg removal. However, the way this moves before and after is completely different. It's a different beast. It became a different beast. It's just what happens, basically. That move. We've never had anything like that before. That's a one-off. It's the only time ever in my trading career brokers have gone bankrupt, literally in hours. I remember it like clear as day. I remember it. We were like, what the hell was that? And then all of a sudden terminals froze, everything froze. So I opened up new terminals. They were all frozen. I went to every terminal on every broker, every single chat I went to on my brokers. I was with Alpari and Axie at the time, not Axie, IC Markets at the time. And it said, you are number 860 something in the queue. And I'd got to the queue, I thought, pretty quick. My terminal froze. I was like, what's going on? 5 minutes later, I was on the chat system in queue 864. They only had 10 people in the chat system. No chance of talking to them. And then I get an email a couple of days later, Alpari's gone bust. We are the legal firm dealing with the liquidation. Thank you very much. We'll see you in 3 months and hopefully you get your money back. That was it. That is an absolute outlier. But that was a change, a big change, which we had never seen before. And it completely created a new order of currency safe haven. So the yen became less safe haven. The Swiss became safe haven. The US has just turned its back on the world. What's the US dollar going to do now? It's going to be different, very different. So if US dollar isn't going to be the world's currency, is it going to be the euro? Maybe. It could suddenly turn into being the yuan. Probably not the yen, but there's, if it's not the dollar, there's not many options out there, is there? So new currencies come to the fore all the time. Not all the time, but every now and again. So we'll see. Who knows what's around the corner? Basically, Russia and Ukraine have had a meeting today. Trump's been involved in it. He could say, screw you, I'm going to move into Ukraine. Russia could say, we don't like that very much. I'm going to send 500,000 troops onto the border, and one of them accidentally shoots an American. Yeah, America enters the war. World War III kicks off. Nuclear war happens. Doesn't really matter what you trade then, does it? You just carry on. We won't have any power. We won't have anything. It's the end. Doom and gloom. It's Friday. I've just lost $2,000. Not positive. I'm loving it. I love trading. I'm in it now for a year, and I won't do anything else ever again, I hope. Cool. Just understand, obviously, it's not a regular paycheck. Basically, it's a regular paycheck over a period of a year, but it's not a regular paycheck each month or each day. You can't go every single day, every single week. I'm guaranteed X. I'm up at least $10 for the beer. That is, thanks to David, that is true, Herman. I am up $10. You need to watch The Day After. Not sure if you can remember. The Day After. It was a movie that scared the hell out of me as a kid. Cold War. Oh, yes. Yeah, no, it does ring a bell. Market's breaking down. Still in the DAX. I'm done. DAX is my only real hope today. But I mean, the DAX TP, if it collapses, is only 500. So best case scenario today is going to be 1,500 loss. So yeah, I was going to look that up. The Day After. The Day After. 1983. That's a good looking CGI, isn't it? Steve Guttenberg. John Lithgow. Wow. I was going to say, I thought I recognised the guy in the picture. That's John Lithgow, isn't it? That's not. That's not John Lithgow. That's John Lithgow. Third Rock from the Sun. I think. Is he the Third Rock from the Sun guy? Yeah. Shrek. Oh, yeah, he was the little man in Shrek, wasn't he? Little man that's overcompensating. Greed index. Look at this. This is unusual as well. Greed index is bullish indices. What are we not getting at the moment? Bullish indices. Yeah, it's really odd. The fear greed index correlation has fallen out of bed. We've flicked over into greed, and yet we don't seem to be able to make any progress. Day on day, you would expect the market to be really rallying. I mean, admittedly, we did have the gap up, but that was caused by Trump. That wasn't caused by a huge bullish move, was it? But this, it's very, very grindy, isn't it? Considering how greedy we're meant to be. I don't believe it. So I didn't actually look at the news, did I? We could kind of tell. So, yeah, sentiment down, obviously. Now you're breaking short. Okay, so that order's gone, look. I still wouldn't trust it. The movie is even older than you. Wow. Certainly not older than me. I remember the 80s very well. Actually, I was 10, so I don't remember it that well. This is how it felt living 50 miles away from a Soviet missile silo across the border in East Germany. Blimey. Yes, 10. I was 10. I was a little 10-year-old boy throwing mud balls at buses, because that's what we did in those days. We threw mud balls at buses because we didn't have tablets. So we had mud. We played with mud. Those were the days. Right, I'm going to leave it there because this is just not doing it today, is it? It's probably going to break down by the looks of it, but I've got short on the DAX. I mean, this is just an utter mess. So nothing to do with it today. So I'll let the run, let it do what it wants to do. We've got a bit of divergence as well. We've got a break up on the Dow. The S&P hasn't gone anywhere, and the Nasdaq has broken to the downside. So all three indices are slightly out of whack today, aren't they? They're all a little bit out of confluence, but not much we can do with it. FX side of things, can't get anything today into profit either. It's just sitting sideways. So we'll wait until Monday. Is that loss just index trades? Yeah. To lose, that means when you're right, it must be party time. Everything you do is money managed. Yeah. Yeah. So basically, the P&Ls day by day. But the opening range breakout EA, this version 3, works on dynamic risk. So on Monday, we start off with $430 risk, which means that to recoup that, or whatever we end up at today, is easy, because if you're risking 430, you get a 3R move that recoups most of that loss. So that's what dynamic risk is all about, is trying to recoup the losses when the losses are there. When the losses aren't there, you just trade as normal. So it's all to do with market condition. All strategies work in certain market conditions. When the market conditions change, they don't work. Yeah. So when the market conditions are right, I don't know why I'm drawing this, but just drawing squiggly lines on a chart. When the market conditions are right, the strategy works. You just do the same thing. When the market conditions are wrong, you adjust your risk to take into account the bad market conditions, so that when the market conditions return to the right, you can recoup those losses and carry on the property equity curve. So all we're doing is we're maintaining the equity curve. During periods where the market conditions are incorrect for the strategy, we increase the risk to recover the loss and wait for the market to return back to whatever it's needed. Doesn't matter what strategy it is, whether it's position trading, mean reversion, whether it's breakout, trend, whatever. When the market's not doing what you want it to do for the strategy, you adjust your risk. So that's risk adjusted for Monday. But there is one more trade, potentially. I mean, I don't even think I want it. 3:30. I'm done for the day. I'm not even going to attempt a long, even if it wants to. I don't trust it today. It's not conducive to making money. So that DAX will either break even or it'll make some more for the day. That's it. What was what that's what stop loss means. When you lose, you stop. Back to capital. Yeah. Right. So I will be back on Monday. Over the weekend, there's not a lot really happening, apart from Eurovision. really interested in Eurovision, I should watch it, only for an excuse to drink beer. But Eurovision's on this weekend. But apart from that, there's nothing. We've got a bank holiday on Monday in Canada, but that's it. So just looking at, next week, Australian rates coming out on Tuesday. I don't know what they're doing with those, but I don't suspect they'll move much. We've got Canadian CPI, we've got pound CPI, and it's PMI week. So it's a fairly busy week news-wise. Monday's dead, but from Tuesday onwards, we've got a lot of news. So it should be a fairly good week next week for movement, as long as the markets are alive and we haven't had a nuclear war start. Why do you trade both the US and the NASDAQ? You say they're highly correlated. Because when I lose twice as hard. When I win twice as big. Up to you. You don't have to trade in both. They're not always correlated either. So at the moment, they are in correlation. Well, they're not actually. So at the moment, they are out of correlation. Yeah. So this is downtrending. This is uptrending. They're not doing anything at the moment much, but they are not in correlation right now. So, it's up to you. It's higher risk. Personal preference if you want to take more risk or less risk. What I could do is just trade one of them and double the risk, or leave the risk the same. No right or wrong, do what you want. I don't trade the Russell because the Russell... I've never tested the Russell, to be fair. Don't know that I've got the Russell. I haven't got the Russell here. Have I got the Russell here? No, I haven't got the Russell. So I can't trade it. But I haven't tested it. I personally don't like the Russell. I used to like it scalping. Never tested it with this. Test it. If you think there's an edge in the Russell, because it will be uncorrelated as well, because it's 2,000 stocks. So it's a real mix of low cap stocks. So not low cap, but I mean medium cap. So it's worth testing. Worth a look. And if the edge works, the edge works. Some people are trading the brain's gone. Some people are trading the Japanese one. My brain's gone today. I can't remember what it's called. The JP225. What's it called? The Nikkei. My God. Wow. Brain fog. Friday afternoon brain fog. Yeah, some people are trading the Nikkei as well. I'm asleep for it, so I don't want to trade it. The Gypsy. It's not called the Gypsy. Might be nicknamed the Gypsy. I don't know. I've never traded it. But yeah, you can try it. Quickly explain the difference between position trader EA and market reverse alerts EA. There's not a lot. I can't do it quickly, no. Market reverse alerts EA's got 1 billion inputs. Position trader EA hasn't. So basically, the market reversal alert EA is designed to work on market reversal alerts only. It has a trend filter, a moving average trend filter. It only signals on market reversal alerts. Yeah. And you can use higher time frame reversal alerts in it as well. The position trader EA has manual buttons allowing you to place pending orders, limit orders, close orders, and to actually just enter when you want to. It has 3 signals for entry, a 3-bar reversal, a market reversal alert, and a moving average crossover. It doesn't have a moving average filter, and it's better, faster, less inputs, less complicated. They're very similar in what they do, but they are different. So the market reversal alerts indicate EA, I just do not use anymore. It's dead, as far as I'm concerned. It's not dead. It's fine. It works absolutely fine. A lot of people are still using it, but position trader EA is kind of the evolution. I wanted to rebuild it because the market reversal alerts EA is too complicated. There's too many inputs in there. You can trade levels with it. You can do all sorts of stuff. Market's coming down now. Look, hard as well. So yeah, it's too complicated. It's way too complex. It was initially a really simple EA. It was literally just designed to trade stop loss strategies for the market reversal alert indicator. I position trade with it. Well, I was position trading with the reversal alerts indicator. So I decided to make that as a position trading EA. And then everybody said, it was the first EA I commercially developed. So everybody said to me, can you do this? Can you do that? Can you add this? Can you adjust it to do that? So I stupidly said yes to everything. Before I knew it, the EA had somewhere in the region of 60 to 70 inputs. So when new people would pick it up and go, what do you do with it? There was a million answers. So it became so complicated and it was trading so many strategies. When you stuck it in the tester, if you wanted to trade a month's worth of price action on the 5-minute chart, it would take a day. So it became unusable. So that's why I flipped over onto the position trader EA. So I scaled all the code back to the bits that I use and I think are important. And that's basically what it does now. That's so frustrating. That has got to be the stop of the week. Look at it. That is where it stopped me out. It literally stopped me out at the absolute peak of the pullback. I can't zoom in. I can go one more. But that candle, the wick of that candle literally is there. Someone had just said something. Market's just melting, just decided to melt. It's because they went, have we got Lee yet? And it was like, yeah, we took him out. All right, let's go. I'm going to go and spend David's $10 on a beer. DAX, obviously, because this is all melting, the DAX has decided not to melt as much because it's the only thing that I'm in. So I might grab another 500 this afternoon, but that's it. There you go. You can see how uncorrelated we are. Look, so yeah, we are not doing the same thing on some of these indices at the minute. Especially, I mean, these two aren't quite as correlated, but obviously S&P and the Nasdaq very, very similar. So watch downsides on these. Obviously, yesterday's low is an obvious spot. We have broken the pre-market lows. So Globex lows have gone. So that's the flush that I was talking about earlier. When that iceberg order gets broken, yeah, that's basically the outcome. Yeah. So when you've got so much selling volume getting absorbed by one order, when that order isn't there anymore, you get hit with the same amount and the absorption isn't there and it flips. Everybody that was buying this low got broken and they flipped short. Yeah, don't forget market participants aren't stopping out. They are either long or short bias. You're always in. So if you're in long, and you get broken, you flip short. The flip short pops the market. So watch this propulsion move for a short entry. That's where they'll add in shorts. But I'm not interested. I'm done for the day. It's a Swiss Army knife. Is the same as the position trading and squeeze. Once you get out, we have to jump on. Yeah, exactly. Yeah. So as soon as I'm squeezed and I can't stand it anymore and I close my position, that's when it reverses. As soon as I get stopped out, that's when it reverses. Always the way. SIH might actually be all right today. Yeah, so SIH is going to end in a profit today. 6%, 0.6%. Not a lot. It's a profit. So got a hedge on the Dow, S&P, and the Nasdaq, both clean breaks. Nasdaq will be hitting target shortly. 2R on the Nas. So Nasdaq target will be 3R. So look for a pullback and continuation short. Annoying day. Very annoying. Out of curiosity, I have a question. Would it be possible to create an EA that knows the pairs that are correlated? If you were in a trade on one, it would allow you to notify you that you're already in a correlated trade. You could do, but you'd need to come up with a measurement of correlation. So this is kind of to do with currency strength. So the currency strength meter has a particular algorithm that they use to create it. There is no, again, like all indicators, strategies, EAs, whatever, there's no right or wrong. There is different. So how you measure correlation is going to be important. So yes, you can make an EA that measures correlation. You can make an EA that measures currency strength. But you need to come up with an algorithm for correlation and currency strength. So correlation can be measured in a number of different ways. I think of the best Mataf's one, yeah. So if you look at the correlation here and switch that to 15-minute, refresh. Did that refresh? Yeah, you're going to get different readings. If you go over to a daily, you'll get different correlation readings, basically. So how do you measure correlation? I personally look at it on a weekly basis because intraday, you are going to get things move the same. So, for example, the pairs that I'm in, Euro Swiss, Euro Pound, and Euro CAD. Sorry, there's 3 euros I can get into. So Euro Swiss, Euro Pound, and Euro CAD. If there is news on the euro that the CPI number has gone up and they're going to increase interest rates, all of my euro will correlate. Yeah, all of the euro pairs will go up at the same speed because there won't be any resistance for them. But when the euro Swiss goes up, the euro pound goes up, and the euro CAD goes up, what happens the next day is there will be interest in buying the euro again. However, the next day, the Canadian dollar interest rate goes up. So the euro pound will go up, the euro Swiss will go up, but the euro CAD will come down because the Canadian has driven more into the euro, more into the CAD than the euro can. So they become uncorrelated again. So if you measure intraday correlation or day-by-day correlation, you'll find that there is a lot of correlation. However, if you measure weekly correlation, that measures more of the longer-term strength. Yeah, I find that to be the best way because we are interested as position traders in longer-term swings, not in what it's doing today. So intraday, I don't care. Day by day, I don't care, which is why I don't pay any attention to this. Because this correlation, you can see here, is from 5 p.m. through to 3 a.m. I don't care what happened. in the last 8, 12, 16 hours. Doesn't matter. I can see on a chart, right? It doesn't take a rocket scientist to know that that says that the New Zealand dollar is strong. That says that the US dollar is weak. What do you think happened to the New Zealand dollar, US dollar? Yeah, you don't need to be clever to tell that it went up because the chart tells you that. But over a longer term, it's more what is it expected to do or what has it been doing over a longer period. And that means that it will get directional movement different to everything else. Yeah. So if you look at the euro pairs at the moment, we haven't had a lot of euro news this week. So if you look at the euro Swiss, where are we? Friday, Thursday, Wednesday, Tuesday, Monday. So there's your open on the euro Swiss. And we've gone, slightly up. The euro pound, yeah, we're massively down. And euro CAD, we're exactly where we started. Yeah. So one's gone up, one's gone down, one's gone sideways. They're all the euro. But because there's been no news on the euro, the pound's been strong, the CAD's been neutral with the euro, and the other one's been whatever. Yeah. So, they are not the same. If you look at, like I said earlier, the Aussie US and the New Zealand US, it's exactly the same thing. Yeah. So these are over 90% correlated. Yeah. The price action is 90% of the time the same. So you don't trade those two together because you're trading the same thing. You're just doubling your exposure. And as we've just, just discussed, it's exactly the same with, at the moment, the US indices. That's the S&P 500. That's the NASDAQ. They're the same. But they're not always the same because tech stocks have different movement at different times of year, especially when we've got tariffs going on with China, because obviously 90% of it is all made in China. So if something goes wrong in China, the NASDAQ and the S&P 500 are going to go out of sync. Right now, though, they're not. So you'd need to come up with an algorithm for measuring it, which, again, is discretionary, isn't it? So it's possible to do. But the best thing to do is check it. What I tend to do is I check periodically. This is not the one that I use, because this only measures daily and 4 hourly. The one that I use investing. No, it's not that. Maybe it is FX book. Oh yeah, it was my FX book. It's this one. So, I would pick a week, and then say, I want everything with a correlation lower than 60%, and with a correlation higher than 60%. Yeah. And then it's basically a process of going through and making sure you pick stuff that isn't correlated. So you can filter this out as well to just show you specific things. But it's just a case of checking to see what moves together. So anything above 75% here, for example, Aussie dollar yen and the euro yen, 75% correlated, which means that 25% of the time they don't move the same. But the pound yen and the Aussie yen are 85% correlated. So if you're going to pick a yen pair, 2 yen pairs to trade, you would pick the ones with the lowest correlation, making sure that you're keeping them so they can move independently. So if you look at things like, let's find the Aussie US and the New Zealand US. N, there we are. New Zealand US. Yep. So there's the New Zealand US dollar, and there's the Aussie US dollar. Yeah. So they are 87.7, nearly 90% correlated. So there's no point in trading those two. Anything lower than 60% is safe. Anything lower than 70% is all right. Anything lower than 75%, I'd say that's probably the max I'd go to. Anything above 75%, you're going to get it doing the same thing at the same time. So it's certainly possible to do anything, and you can do anything with EAs, absolutely anything. But you need to know what you've got to come up with the maths basically behind it. So watch the Nasdaq here for bears. This might just come back in here and sit around. Might just be a nightmare today. You have not mentioned swap costs recently. Do you still consider them yet? So again, when I've been picking my instruments, I am looking at swaps. Obviously, anything I've relaxed my swaps. So I've moved my swap filter to 10. So I'm happy to take $10 swap. But you can see some of these costs are already building up. Look. So my swap costs aren't massive at the moment. So that 1300 I've paid 29.66 on, which is all right. Doesn't matter. But I haven't held any. There's nothing in there that is a long-term hold at the moment. So we've got $23 on the euro pound. That's on a 255 drawdown. So the swap costs on that drawdown is 10%. So it's creeping. But the euro pound, if you look at it, the swap is 640 on longs, and I am long, and it is coming down. Why is the euro collapsing so much? Or is the pound strengthening? Do we have any new chart? Some strength coming into the pound at the moment. So that pound US dollar is coming down. That's nice. So back to break even on the pound US dollar pretty much. Euro CAD going into profit. We've got some Canadian strength coming through. We've got some US strength coming through. If we can get an ADR out of the Euro CAD, I might bank something today. Just market movement. They're just selling off, aren't they? Friday, they want to go down the pub. Speaking of pub, so yeah, I am still considering swaps, but I mean, you pick swaps you want. I'm sticking with $10. I'm loosening it up because I need to get some trades on. I need to get some risk on. I can't be too tight and restrictive at the moment. I need to get stuff on. Just need it to move now. Right, so I'll be back on Monday. Usual time, 8 o'clock. We'll have a look at the market week ahead. See what we got coming up. We'll trade the DAX and the FTSE, try and get some of that loss back from today, and then see where we go from there. There's not anything meeting-wise scheduled over the weekend that I'm aware of, that Trump might announce something, so we should be okay over the weekend, but you never know. So be prepared for gaps as usual. Try not to hold over the weekend if you can help it. But if you're position trading, you can't. So you're going to have to. Right, I'll be back on Monday. Anything you need, let me know, Discord or Telegram. Other than that, have a good weekend, and I will see you next week. Have a good one.